The U.S. and China have made significant progress on trade, having drafted a 150-page agreement. But recently, Chinese officials made a change that frustrated the U.S., removing a commitment to change certain laws. Number one, the one to disallow forced intellectual property or IP transfer, and two, set limits on government subsidies. How did the U.S. respond? By raising existing tariffs on $200 billion in Chinese imports from 10 to 25%. In turn, China announced an increase in tariffs on $60 billion of U.S. imports. In this week's SightLines, we take a closer look at where we are with U.S.-China trade and where we may go from here. So what are some of the key U.S. interests? The U.S. is focused on protecting its intellectual property, having China create a freer market in its economy, and having confidence that the way China implements reforms will have staying power. On the other hand, China is pushing for a freer exchange of technology-related goods and services, a more open market for Chinese companies in the U.S., and immediate removal of all existing tariffs. So where do we go from here? Well, we acknowledge that there are some risks in the current situation. Tariffs may remain in place, tensions may escalate further, which could lead to U.S. sanctions or restrictions on Chinese investments in the U.S. China can also take actions such as selling U.S. treasuries. Now, our base case remains that the U.S. and China will reach an agreement this year. We see negotiations continuing, building on the existing 150-page draft agreement. And we hear this in all the messaging from both the U.S. and China, that progress is being made and that disagreements are all part of the negotiation process. We invite you to read SightLines to learn more about our analysis and views on U.S.-China trade.